Hello everybody, Trader99 here and welcome to beginning sessions. Has this ever happened to you? This is a Ripple 4-hour chart. You can see price starting to go up, you wait for a pullback, price starts going in your favor, you wait for a pullback and you enter the trade, price starts moving in your favor, and this is called the when Lambo stage. You call your Lambo dealership, you are feeling invincible. Next is the maximum euphoria stage. This is when price continues going in your favor and you start feeling really rich. Then we have the religious correction phase where you think everything is a correction, you start looking for reversal signals. Everything at this stage is a reversal signal. And then we enter the I should have could have phase where you feel like you should have sold here or you should have sold here and you could have made X amount of money. So today we're going to talk about the foundations of being a good trader. This is absolutely something you have to know before you enter the market. Number one, have an entry and exit plan. Number two, stick to your plan. Number three, always have good fundamentals. And number four, trading psychology. Even long-term holders have an entry and exit plan. So entry plan, how do you enter the trade? Exit plan, how do you exit the trade with small losses, small profit, or big profit? Now, the game plan is simple. Number one, we identify key levels of resistance. So as you can see here on the Ripple chart, we have $1.90, $1.45, $1.10, and even down here to 65 cents. Step 2, we identify trend lines. Which way is the market moving? As we can see here, there is a very clear downward trend line. Number 3, we look at the moving averages. So as you can see here, I have the 9 EMA, 20 EMA, 50 EMA, 100 SMA, and 200 SMA. This paints me a pretty clear picture of what I need to see in the market. The 9 EMA is the short-term movements and the 200 SMA is the long-term movements. When price moves below the average line, there is a possibility of a downtrend. When it moves above the MA line, there is a possibility of an uptrend. Now, I say possibility, guys, because trading is a game of possibilities. It's a game of probabilities. Number 4, we look for momentum indicators. This will tell you how fast or slow price is moving. We use the MACD indicator and we use the awesome oscillator, and these indicators are extremely simple to use. Downward momentum, we look for MACD cross here and we can see it start moving below the zero line. As for the awesome oscillator, we can see that the color starts turning red. That means the upward momentum is starting to slow down and we might see a downward push, and as you can see, it did happen. Upward momentum is exactly the opposite. MACD indicator starts going above the zero line and the awesome oscillator starts turning green and above the zero line. So guys, when to enter into a buy? Number one, you wait for price to move above the moving average. You wait for price to break a trend line. You wait for your MACD indicator to go above the zero. You wait for your awesome oscillator to turn green. As you can see here, awesome oscillator is green. Momentum is above zero, broken above trend line, and we have takeoff. This is called a high level of bullish confluence. As you can see, price break above the trend line. It's above the moving average. MACD indicator is on the upside. Awesome oscillator is on the upside, and that is very important when you're entering into a buy. What about when you go into a sell? What about when you go into a sell? The exact same thing. Price below the moving average, price has broken this trend line, MACD indicator has gone down to zero, and the awesome oscillator has turned red. As you can see here, these signs are clear as day. They're very clear. This is a 4-hour chart, so if you had bought here, you just had to wait 1 day, 2 day. It was a very good short position. Again, it's known as a level of high bearish confluence. Breaking below the trend line, price moving below the moving average, MACD, and awesome oscillator. I can keep repeating myself, but it's always going to be the same thing. Okay, but why does this work? Well, it works because when there's a level of high confluence, that's when the artificial intelligence, all the algorithms, the professional traders, even the grandma, anybody who knows basic trading is looking at this level here. That's why it is a level of high confluence. A lot of people are looking at these levels, ready to make a move. The market is not against you. The market doesn't know you're in the market. You probably just entered a trade when there was a high area of confluence going against you. That is it. So when do you exit your buy position? You exit number one at a stop loss over here if price moves below the moving average line, and you exit over here at a profit once you see the price starts moving below the average lines over here, or when you see the MACD indicator starts going down, or when the awesome oscillator starts turning red. So when do you exit your sell position? Number one, you can exit at a stop loss here once the price moves above the moving average lines. If we are in profit, then we will exit once the moving average crosses, or when the MACD indicator starts going towards the upside, or once the awesome oscillator turns green. Okay, but if it's so easy, why aren't all traders rich? why do 90% fail? Well, because of trading psychology. It is incredibly hard to take a stop loss, and it is incredibly hard to close your trade here because you are unsure if it will go down. You are in a state of euphoria, and this state of euphoria makes you believe that every sign is a reversal signal even when it is not, and you believe that price can only go up. If we go back to the earlier chart, you can see that it is incredibly hard to give up this much gains and sell here. You simply will not know how price will react, so you have to go with the action of highest probability of success, even if it means giving up gains. And guys, the hardest part of trading is to know when you're wrong, because you can never blame anybody else for your loss. Your money, your responsibility. Trading is a skill that can turn you into a money printing machine, and you will always make mistakes at first, especially if you do not watch tutorial videos before trading. Even if you have to buy a course to listen to somebody tell you exactly what I'm telling you now. This is a skill where it literally takes money to make money, and you can only improve by trading every single day. The best way to learn trading is to risk extremely small, even if it's just $10 per trade. Small losses is part of trading and you have to accept it. If you even have one big loss, it can only mean that you did not follow a trading plan, and you can only blame yourself for not training hard enough. And so guys, again, just remember, the hardest part of trading is know when you're wrong. You can never blame anybody else for your loss. Your money, your responsibility. Remember guys, trading is a game of probabilities and it is a zero-sum game. So for every winner, there is a loser. And after watching this video, I hope that you don't find yourself on the loser side as much. Now let's get into some examples with fundamentals. I have chosen Ripple because of the SEC lawsuit, and as you can see here, on the 20th to 21st of December, price has already started the downtrend. You can see price start breaking below level of resistance here. You can see price starting to move towards the line of support here, breaking key levels. MACD is in a downward momentum and Awesome Oscillator has turned red. So as you can see here, it was the fundamentals of the SEC that brought the price down. However, we could have detected it using the technical indicators. This is not to say that technical indicators predicted the fundamentals, but the fact is that no matter what the whales do or the algorithms do, they cannot hide their actions because it is all plotted on the charts. And the SEC lawsuit happened on the 22nd of December. So next fundamental that I want to analyze is the hype pump. And as you can see, price beginning an uptrend. Around here, people were already starting to say, pump Ripple, pump Ripple. Twitter was going crazy. Price moves above the moving average lines, it breaks this key level, MACD, upward momentum, and you have the Awesome Oscillator turning green. Random group then pumps XRP. We don't know who they are, but they pumped it, and you could have got out here as price moved below the moving average. It would have been so hard because that would have required you to give up this much gains. Another pro tip is you could also always get out here when you see a pin bar, a bearish pin bar. As you can see here, this is also a very strong sign of reversal. So to recap, look for areas of high confluences, trend lines, key levels, moving average, momentum. Have an entry and exit plan, follow the plan, follow trading psychology. Make sure of strong fundamentals in the project that you're investing in. Always remember guys, trading is a zero-sum game. If you lose money, somebody else is making money. If you make money, somebody else is losing money. I hope you don't find yourself on the losing end as much after watching this video. As always guys, if you like the content, please like and subscribe and share. I hope you learned something new today, and I'll see you in the next one.